What's going on, guys? This is Aaron from Departures Capital, and welcome to the video. In this video, we had the pleasure of interviewing Keith Neumeyer, who is the founder and CEO of First Majestic Silver, the founder and chairman of First Mining Gold, and the founder and former president of First Quantum Minerals. Keith has started multiple billion-dollar companies. He's an industry veteran, and I promised you guys we'd be talking about silver from the industry experts. So it was a fantastic interview. I love talking to Keith. He was on the channel about a year ago, and a lot has changed since then. So we're talking in this interview a lot about First Majestic Silver, along with the price of silver. As you know, Keith has triple-digit price targets on silver. So it's a fantastic interview. Check it out. Of course, if you do like these kinds of videos and support the channel, smash that like button, as well as if you're a new viewer to the channel and you like constant daily coverage on the markets and you do want to stay up to date on the financial world, then of course, smash that subscribe button and the bell for notifications for your constant daily coverage on your favorite companies, your favorite stocks, and let's dive straight into this awesome interview. What's going on, guys? This is Aaron with Departures Capital. We're here with Keith Neumeyer, founder and CEO of First Majestic Silver, founder and chairman of First Mining Gold, and founder and former president of First Quantum Minerals. How are you doing today?
Great, Aaron. Great seeing you again.
Really happy to have you on the show, and I'm really excited to talk about gold and silver and First Majestic specifically. So first, let's talk about the gold and silver ratio. We've been trying to pinpoint when that trend reverses. Personally, I was following it all throughout March when it was peaking. What's your view on this?
Well, I'm a big advocate of the ratio. People know I'm a believer of true supply-demand fundamentals, and we are mining on a global scale. For every 1 ounce of gold, only 8 ounces of silver. So, for silver to be trading at 100 to 1, to me is just mind-boggling. I can't quite understand why that's the case. And people say, well, it's disconnected from the ratio, and there's these are the following reasons, and so on and so forth. So a lot of people try to make up stories or try to make up ideas, why the ratio's been broken and has disconnected from its norms. I just think it's the trade. There's a big short on silver. There's a big short on copper. There's trade wars going on around the world. The economy is obviously in dire straits, and silver unfortunately does trade like a base metal. It is a strategic resource, a strategic metal that we need as the human race to do everything that we want to do, like this call, for example. Wouldn't be possible without silver or copper. Those two metals are must investments, I feel, and gold, of course, is the granddaddy of currencies. So, your investment thesis for silver and gold, some people put them in the same camp. Of course, gold will drag silver along. If gold's going down, of course, silver's going to go down. That's just a fact of life. It'd be very difficult for me to fathom silver going up and gold going down. I suppose it's possible because the supply and demand fundamentals for silver are so strong, and silver should be trading at north of $100 an ounce, in my view, just based on supply and demand and the ratio. But does that mean $3,000 gold and silver catches up and starts trading in triple digits? Well, that's probably the scenario. When we do see gold really prove to the world that this is a brand new bull market and this is just not a blip. This is not a COVID thing. This is, some people, we saw the other day that, someone said, oh, the vaccine for COVID is going to be available by the end of 2020, and gold was down $30 that day, just last week. And, so a lot of this stuff is headline driven. The fact is that the governments around the world are printing like crazy. There's going to be a bid on gold for the foreseeable future, the next 5 or 10 years. Everyone should own gold, and silver, you should own it as well. But, the supply demand fundamentals, I think, will take over the price, and silver will ultimately outperform gold.
I had this one little theory that right now silver is in kind of a Goldilocks environment. What do you think about that?
Yeah, I listened to a report this morning, the COT, and I don't follow the COT reports that closely. I don't have the time to be doing that type of deep analysis. We deal with the banks. I know the demand is there for our metal, and that's quite frankly all I care about. So, but these COT reports are showing apparently that there's a huge amount silver and to a lesser degree gold up for delivery. I heard this morning that there was something north of 40,000 contracts waiting for delivery of silver, which is unheard of.
Yeah.
There's never been that type of demand. So, and that news just came out today. And so, of course, silver is now up 50 or 60 cents because there is a very restricted actual physical supply of the metal. So if you're a real consumer, that you need this for, you need silver to produce, cell phones or computers or automobiles or televisions or whatever you're using silver for, you're having a hard time finding it. So they're going into the futures market to buy it and then ask for delivery. So, we could potentially see a COMOX break here, which would be quite interesting. If that happens, unfortunately the COMOX has the game rigged, and they'll just cut you a check. They'll deliver cash. They actually don't have to deliver the metal. So these 40, it's a very rigged game. So these 46,000 contracts that are apparently there to be delivered into, if the COMEX decides not to deliver it, they don't have to. They'll just cut a check.
Yeah, that's kind of what I was trying to say. Just, silver is going to receive support just because they actually need the metal. And then, of course, the safe haven aspect as well. I think it's just an awesome environment for silver. So now let's talk a little bit about this whole global illness, the COVID-19 thing. So what are your thoughts on just the crisis management itself? How's the world done?
Well, I've got some personal views on this. Being my age, I turned 60 this year, and I've been through, a lot of, problems in the world. I remember, when I was your age, AIDS, hit the planet, and it was a devastating thing for people of the age group of late teens, early 20s, and we had to change our lifestyle quite dramatically. And one of my friends died. I had to start a handful of my friends actually get it. And it was pretty. It went through the young community quite quickly, and there was nothing, no cures, nothing, and it was pretty ugly. And but the governments didn't shut anything down. Right? The governments came out with a message and saying, look, this is what we need you to do. This is you need to change your lifestyle in these ways. And of course, everyone did. And they got finally a cure, or next to a cure was dealt with. Or, it took about 5 years, I believe it took before they actually had some resolution to it. But I've been through SARS. I've been through other big flu periods. And we get alerts. I'm not sure about in Ontario, but here in BC, if there's a bad flu season expected, the government will come out and say, we expect this upcoming flu season to be quite bad, and go get your shots, or go or just do these things, and they'll put out a list of things to do, and we all live through it, and when we all get it eventually, anyways, or most of it, yeah. So I just think it's not, I don't think it's the government's place to actually tell businesses that they can't operate. There's and it shocks me that the Best Buys, or the Future Shops, or the Canadian Tires, or the Whole Foods, you name it, these big corporations can stay open during the pandemic. Sure, there's lineups to get in, and you have to wait and be patient to get in. Yet the mom and pop on the street who desperately need that business to survive and pay for their meals for their kids and take their kids through school and so on and so forth, have to shut down, and in some cases go bankrupt. A lot of these businesses won't come back. So who does that benefit? It benefits the big corporations, right? And that's where I see the real issue. And I hope that we don't see this type of action again by our governments. Because I do think it's an inappropriate overreaction to something that we as a human race could have dealt with on our own through proper notice from our governments to avoid certain behaviors. Anyways, I probably said too much as it is, but that's my view. And we're all just going to get out of this, and we'll be looking back at this period of our lives, and I think shaking our head a little bit on how we all reacted to it.
Yeah, no, exactly. It's kind of just one big experiment, everyone did it different. That's kind of just how it went. So in terms of the economic impact, do you think it's going to be a V shape, W shape, U shape, recession?
Yeah, well, based on looking at the stock market with the S&P blowing through 3,000 yesterday or the day before, it sure looks like it is a V shape, but I just don't think it is. I think that the devastation of the economy is still not really felt yet. The markets are in this kind of, you called it Goldilocks, but there's markets in this, fallacy whereby they think that everything's just going to revert back to normal. Well, this is going to take a decade, at least 5 years to re-employ 40 million Americans. And, that's just the U.S. economy. The world economy is just as bad shape as the U.S. is, except, of course, everyone's focused on the U.S. as the largest economy. So we see those numbers. But, it's a lot of people to re-employ. And then some of these businesses just simply won't come back. So I think that it's going to take some time. I look at this as the 1929 to 1933 period. And I lived through 87. I was on the floor of the Vancouver Stock Exchange when the Dow went down 25% in one day. And I survived it and did quite well as a result of it. I've lived through the 97, 98, calamities in the resource sector. I lived through the dot-com bubble in 2000 when the NASDAQ hit 5,000 in March of 2000. And over the next 3 years, it went down 80%. Of course, we've all lived through the 2008, 2009, calamity. So, this particular market, they're looking at, the 2009 and saying, okay, well, look what happened. 2010, 2011 were pretty good years. But this is, in my view, going to be about a 3 or 4 year issue. So we've had a great rally. And I think over the next couple of years, as reality starts to set in, these major US markets, which are really the ones we're all watching, are going to crack and likely drop pretty significantly from current levels. And from 1930 to 1933, gold did quite well. And Homestake was one of the best performing stocks. I think it was actually the best performing stock on the American Stock Exchange back in those years. So I'm looking for a major bull run in gold and silver over the next couple of years as the major US markets probably decline.
Yeah, exactly. Because look what happened to gold after the '08 crash. I mean, it went on a really nice run, but we didn't have anywhere near the stimulus that we're seeing now. So I feel like this is going to be record breaking. So yeah, the impact on the mining industry is for this whole global illness as well. What's your opinion on that?
Well, it's First Majestic, I'm the CEO of First Majestic, obviously the chairman of First Mining Gold, but Canada deemed mining essential right from the get-go. So what the mining industry did was very voluntary. They didn't have to do it, but some people, quite honestly, just felt unsafe, being in crowds and so on. So, there's more of a demand from workers to go home and stay with their families and so on. And then that's what First Mining Gold did. They allowed their workers to go home. It's not a very large workforce, I think about 30 or 40 people, but nevertheless, they're all going back to work now. In the case of Mexico, unfortunately, it was not deemed essential. Mm-hmm. So we had to shut down, pretty quickly back in March, and when the first decree went out. And it was pretty disruptive. We were very reluctantly, because it's difficult, to shut down a mine. There's a whole bunch of inputs that are going. There's a whole chain, a supply chain that is affected, and of course, moving people around, and these mines are remote, and to simply shut them down is a pretty difficult thing to do. But we did it, and we're now re-getting them up and running again, and it's going to be a bit of a slow process. It'll take probably a month before everything's back up and running. The governments have been pretty supportive. I think they've realized their mistake in not allowing mining as being essential because of the disruption in the supply chain. It ricochets throughout the entire economy and throughout the entire business sector, because look at the auto sector, for example. We're feeding metal into the auto sector, and Mexico produces parts for American manufacturing of automobiles. So all of a sudden you start stopping mining, you stop everything, right, along that whole supply chain. You can't produce a car without mining.
Exactly.
So it's and I don't think the government's really kind of understood that. But anyways, I could see restaurants and bars and things like that where there's a lot of social, interaction, and they're shut down for a temporary period of time. I think that makes more sense. But to shut down a industry or a plant, whether it's a mine or a Levi's plant in the middle of nowhere, there's usually one road in and out. And if you want to lock that community down, it's pretty easy to do it, and which we did. And then we simply just didn't let anyone in and out. And then the community, of course, bought into it because they were very supportive. They don't want people coming in, with the disease or the virus. And so it worked out for everyone. We didn't get any cases at all in any of our operations, which is really nice. Touch wood. Hopefully that remains the case. But so far so good.
Great. So let's talk about the stimulus package. We know this is now unprecedented levels of fiscal monetary stimulus. So what impact do you think this is going to have on the price of gold and silver?
Well, I think there's two things. There's a social impact, and then there's a financial impact for investors that own gold and silver. In an environment like this, you have to, quite honestly, have gold and silver in your portfolio. It's going to, of course, I'm biased. I run a silver company. I'm the chairman of a gold company. So I've been investing in metals for all my career, and I've done okay on it. And, I could be criticized for talking my own book, but, metals, gold particularly, which is the granddaddy of the gang, goes up in a low interest environment. As interest rates go down, real interest rates, inflation plus rates or minus rates, gold does quite well. And that's where we're likely going to see negative interest rates in the United States. That'll be, we just saw rates go negative in the UK just last week, modestly negative, but I think I forget the bond they sold, but I think it was a 5 or 10 year bond they sold at, something negative, which is pretty ridiculous. But and now people are thinking the U.S., and that's why you've all of a sudden got this bid in gold that's coming in again. People were saying, oh, COVID's being dealt with, and things are going to be hunky-dory again, and there's no reason why gold should be at $1,750 anymore, and gold sold off. Yeah, and now people are realizing that, okay, well, it's really not COVID, it's actually the supply of currency in the system that's driving all of this. So we're going to go into a fairly deflationary period of time, and it could last a couple of years, as I said earlier. Looking at the 1929 to 1933 timeframe. Then we're going to go into a highly inflationary period of time after that, in my view. And gold does quite well in inflationary periods of time too. So gold does well in extreme situations, and I don't think we could expect to see these financial extremities disappear anytime in the next 5 years. So you got to be in there. Just one comment on social impact is that I do have concerns over what governments are doing. By giving people free money, it creates this whole social kind of fabric whereby our young people now have got the taste of not working and getting money. And I think that is going to really could have a long-term negative impact on our society. Because look, I know when I was in my 20s and I got married when I was 28, and my first kids came along when I was in my early 30s, and we're struggling away, and in my early 20s there was times that I had no money in my bank account, and it was tough, right? But I never went on welfare. I never went to the government for help. I never even collected unemployment insurance. I refused to do that. And I just, found a job and got to work. And I felt it would be, against my kind of inner morals to, start collecting money from the government. It's almost embarrassing to do that. But yet today, the young generation, gets these checks in the mail. And look, if I got a check in the mail from the government, I'd probably cash it too. So, but I know for a fact, because there's kids out there, and I've talked to a few of them, that aren't working full time now because they're actually making more money by staying at home than they would if they went out to work. And that's an absolutely ludicrous environment, and it could have long-term ramifications.
I couldn't agree. I mean, I'm a millennial, so I know my generation, and comparing it to your generation, my father's generation, we just don't want to work hard anymore. Like, millennials don't want to work hard, and they just want everything right away, and it's kind of dangerous because the millennials are going to be the ones that control all the wealth down the road. So they're kind of reckless. I'm a little bit concerned, but let's talk about First Majestic Silver now.
Sure.
What's the status of the mine, and how is this going to impact earnings?
Yeah, well, we took our guidance off the table, back in March, like all the other miners had to do, because, all of a sudden, we were producing almost no metal at all in Q2. We produced a little bit, but not a whole bunch. Q1 was a great quarter. Q3, Q4 were bang up quarters. We were hoping, assuming everything goes according to schedule, that Q3 will be pretty well up to 100%, back to 100%. June will be interesting because it'll really dictate what Q3 looks like. Our focus in June is to get all these mines up and running at 100%. Yeah, and if we could accomplish that, then we're going to end Q3 and Q4 in the year of 2020 in a pretty strong position. And with metal prices going through silver prices, I think going through $20 in the next couple of months, or at least by the end of the year, I think First Majestic is in a pretty darn good place to be.
Definitely. I know that you've got pretty good AISC. So how does First Majestic compare with other large miners at this time?
Yeah, look, First Majestic is predominantly silver. We produce two metals only. We produce silver and gold. And we produce that in the form of dory bars. And I don't want to get too complicated for this interview, but we fortunately do not produce concentrates. We produce just simple dory bars, which are great from an economic perspective. It's their lowest cost method or way of producing metal. We're very happy to have 3 mines that all produce dory bars, and at a ratio of 60% silver and 40% gold. So the gold has been great because gold's been on a tear, and that 40% gold has really helped us out a lot over the last few quarters. Despite my bullish view on silver, thinking silver will outperform gold ultimately, it's really the gold that's really been putting smiles on our faces because silver has underperformed. We had silver down at $13, $14 just a month ago. Today it's now close to 18. So that's a big difference for us. A $4 move on silver prices is pretty big. Fortunately, I didn't sell any metal of ours under $17. We sold a little bit just last week on the rally, just a little bit under 17, but all our sales have been north of $17 silver. So I didn't get caught in that whole wave of selling and get, I know many producers probably just sold into a down market, and you'll see when they're coming out with their financial statements how they did. But in our case, I decided to inventory the metal. So we had at the end of a couple of weeks ago, I think we hit a peak of something like close to 1.2 million ounces of silver in our inventory. Wow. Because I refused to sell it, and so by doing that, obviously our investors will see a nice gain on our financial statements as a result of me holding out on those sales.
What's next for the company? The stock did really well in 2019, more than doubling. And what are you most excited for?
Yeah, look, we've really been focused on innovation. I take a lot of pride in our management team, because of some of the major successes we've had on recoveries and just automating these processes. And quite honestly, it's a lot of young people. Back in 2012, when I noticed that the market was deteriorating to the degree it was, between 2012 and 2014, we put in a pretty big team of young, I call them IT professionals, but they're actually really engineers and electrical engineers, chemical engineers that were coming straight out of university, 24, 25-year-old guys and girls, with engineering degrees, that who grew up with iPads and different. And that's a problem with the mining sector, is because it's a very slow moving industry, and it's very reluctant to take on new technologies because, most of the people in this sector are my age, and they're all, caught in their old ways of doing things. And I'm not quite like that. And so we put this team together, and they've achieved some amazing things. I would suggest your listeners go to our website and look at the PowerPoint presentation and see some of the innovations that we brought into the business since 2014. We've reduced our cost by 50% on an all-in sustaining cost basis over that period of time. And it's all done through mostly technology. And we've still got a ton of technology that we're installing in our different operations today. And the business, forget about metal prices going up. We're going to see recoveries and improvements right at the operational level over the next 2 to 3 years, all to do with technology. And I'm assuming we're going to get a pretty nice bull run in metals as well. So we're going to have higher production, higher recoveries of metal, lower costs, and higher prices to sell our metal at, which is a perfect storm for investors coming into this sector. And I think that does differentiate First Majestic quite a lot, because I run into a lot of executives and leaders of other mining companies that just simply aren't going down the same path that we're going down. And they're watching us, for sure, because I know there's a lot of eyeballs on us for some of the things that we're doing, because it is pretty far out. But some of the technologies that we're currently adopting will change the mining sector as a whole, worldwide, in my opinion.
Very exciting. So if silver was $20 an ounce, how would that be beneficial for First Majestic? We know we're almost there. Like we're at 18, almost 50 today, I think. So. Yeah. Well,
$20 an ounce. Like if you look at, of course, every year is different, and I'm not sure if you could always draw straight line analogies to the past. But looking at 2016, we had silver prices at $13.50 in January 2016, and silver hit just under 21 in July of 2016. So over a 6-month period, silver prices went up like $7 an ounce. Our share price, check your charts, for yourself, but it was approximately $4 a share, and I think that was US, and the stock went up to something like $21 or close to $22 US over that period of time. So the stock went up something in the order of 400% or 500% over a 6-month period, and silver prices went up by $7. So it almost has a 3-to-1 kind of correlation. It's not always that way, of course, but it can be that way in a real true bull market. And I think if silver breaks through 20, it's just gonna. Well, I think if silver breaks through 1850, I think the proverbial whatever will hit the fan, because there's a huge short position on our stock, and there's a huge short position on silver. And 1850 is one of these very, very important numbers that silver has not been able to really get through over the last 4 years. And once it breaks through that, it's going to be, the sky's the limit. It could easily go to, $25, $30 in pretty short order, which will be pretty interesting for our shareholders.
Yeah, that's exciting. Testing that level today. So we'll wrap this up. Where can the listeners find more information about First Majestic if they want to figure out more information about the stock or the company?
Sure. Yeah, for those individuals looking for a gold development portfolio, First Mining Gold, go have a look at their website. Feel free to contact them. But on First Mining, it's my full-time job, and been there. We put the company together 18 years ago. You can follow me on Twitter, Keith _Neumeyer, or just go to our website, download the presentation, because there's lots of information on there. Just simply firstmajestic.com, and feel free to contact our investor relations people in the Vancouver office. They're happy to take anyone's call.
Wonderful, Keith. Well, it's been a pleasure. Thank you so much, and I look forward to having you on again. Hopefully, by that time, silver will be, who knows, somewhere much higher.
Okay. Well, good seeing you again.
Yes, for sure. All right, guys, that pretty much wraps up this video. Thank you so much for watching, and drop those comments below. Let me know what you think. Always remember, Departures Capital is for information, education, and entertainment purposes only. Don't buy or sell a stock because you heard it on here. Buy or sell a stock because you've done your research, you've done your thorough due diligence, and you're making your own personal investment decisions for yourself. That's it for the video. We're out of here, guys.